How did Turkey's economy go so wrong? Turkey's economic problems have deep roots. About the most recent crisis was caused by Erdogan's insistence on lowering interest rates in the face of galloping inflation, precisely the opposite tactic of what economists almost universally prescribe. The signs of Turkey's disastrous economy are all around. Long lines snake outside discounted bread kiosks. The price of medicine, milk, and toilet paper are soaring. Some gas stations have closed after exhausting their stock. Angry outbursts have erupted on the streets. Unemployment, high living cost price increase, and bills are breaking our backs, the Confederation of Progressive Trade Unions said last month. Even before the coronavirus pandemic and supply chain bottlenecks began enveloping the world's economies nearly 2 years ago, Turkey was trying to ward off a recession as it struggled with mountainous debt, steep losses in the value of Turkish lira, and rising inflation. But in recent weeks, that slow moving train wreck had sped up with ferocious intensity, and the foot that pushing hardest on the accelerator belongs to the country's authoritarian president Recep Tayyip Erdogan. Why is this happening now? Turkey's economic problem have deep roots, but the most recent crisis was caused by Erdogan's insistence on lowering interest rates in the face of galloping inflation, precisely the opposite tactics of what economists almost universally prescribe. Erdogan, who has ruled Turkey for 18 years, has long registered that particularly painful prescription, but his determination to keep cutting interest rates even as country's inflation rate tops a staggering 21% appears to be pushing Turkey past a tipping point. Normally, investors and other looks to a nation's central bank to keep inflation in check and set interest rates, but Erdogan has repeatedly shown that if Turkey's central bankers and finance ministers won't do what he wants, he will get rid of them, having already fired three in 2 years. The value of the lira has nosedived in recent weeks and on Monday hit a record low, reaching 14.3 to a dollar for about 7 to the dollar earlier this year, pushing some business and households that have borrowed money from abroad into bankruptcy. The currency's steep decline means prices for imported goods keep rising, shortages are common, and people are struggling to afford food and fuel. The youth unemployment rate is 25%, the president's popularity is sinking, and his opponents have become emboldened. With an election coming up in 18 months, Erdogan seems convinced that his strategy will enable the Turkish economy to grow out of its problem. Most economists, however, say a crash is more likely. Why did Turkey's economic problems begin? Erdogan's aggressive pro-growth strategies have worked for him before. Since he began governing Turkey in 2003, he has undertaken expensive infrastructure projects, courted foreign investors, and encouraged business and consumers to load up on debt. Growth took off. Turkey was considered to be an economic miracle during the first decade of Erdogan's rule, said Kadri Tastan, a senior fellow at German Marshall Fund based in Brussels. Poverty was sliced in half, millions of people swelled the ranks of middle class, and foreign investors were eager to lend. But Erdogan's relentless push to expand became unsustainable. Rather than pull back, however, the giddy borrowing continued. The increasingly unstable economy was caught in a bind. High interest rates attracted foreign investors to accept the risk and keep lending, but they would stunt growth. Erdogan was unwilling to accept the trade off and continued to support cheap borrowing as inflation took off and currency value declined. And he insists that high interest rates cause inflation, even though it is low interest rates that put more money into circulation, encourage people to borrow and spend more, and tend to drive up the prices. Erdogan has his own economic philosophy, said Henry Barclay, a fellow at the Council of Foreign Relations. The economy seesawed between these conflicting goals until 2018, when growing political tension between Turkey and the United States caused the value of the lira to topple. The political standoff eased, but the underlying economic problem remained. Erdogan kept pushing state banks to offer cheap loans to households and businesses, and borrowing frenzy continued. Things never really normalized, said Selva Demirap, an economist at KOC University in Istanbul. What is Erdogan's approach to interest rates, and what do economists say? By keeping interest rates low, Erdogan argues that consumers will be more eager to keep shopping and businesses will be more inclined to borrow, invest money in the economy, and hire workers. And if the lira loses value against the dollar, he says Turkish exports will simply become cheaper and foreign consumers will want to even buy more. This is true to some degree, but it comes at a heavy price. Turkey is quite dependent on imports like automobile parts and medicine, as well as fuel and fertilizer and other raw materials. When the lira depreciates, those products cost more to buy. At the same time, Erdogan's disdain for conventional economic theory has scared off some foreign investors who had been eager to loan Turkish businesses hundreds of millions of dollars but now are losing faith in the currency. And the lower rates go, the faster inflation rises. Over the past year, the lira has lost more than 45% of its value, and the official inflation rate has surged past 20%. Although many analysts believe the rate on the streets is much higher. By comparison, an inflation rate of 6.8% so far this year in the United States and 4.9% rate in the Eurozone are enough to set off alarms. What has Erdogan's response been to the intensifying crisis? The president has doubled down on his approach, asserting he will never compromise on his opposition to higher interest rates. Interest rates make the rich richer, poor poorer, he said. In an interview on national television last month, we have prevented our country from being crushed in such a way. The president has invoked Islamic precepts against usury and referred to interest charges on loans as the mother and father of all evil, and blamed foreign interference for rising prices. Analysts like Barki of the Council of Foreign Relations said that such comments are primarily aimed at appealing to more conservative religious segments of the country that represent the core of Erdogan's support. Turkey's fundamental problem, Barke maintains, is that an overly confident ruler who has been seen in power for a long time, he believes in his omnipotence and he is making mistakes, Barke said. But he is surrounded by yes men that nobody can challenge him. Thank you.